I'm Mark Gagan and you're listening to the Voice of Insurance podcast, produced in association with Advantage Go, enabling an enterprise view of exposure. Welcome to a really exciting re-encounter with someone who has been out of our industry for some years, but is now back with a highly original new proposition. In my line of work, I get to see an awful lot of new insurance ideas, and so it takes a lot to fire up my imagination. And when I talk to people on this podcast about those new ideas, often the new product niche or service that they're looking at might have a total addressable market of a few $1 billion. But today our guest has something that is applicable to the entire multi-trillion-dollar capital base of the global P&C insurance industry. Andre Finn is the Chief Strategy Officer of Intellegri, a business looking to apply advanced mathematical and computational techniques to capital modelling. Now, if that sounds a bit dry at first, please bear with me. At present, our industry holds large amounts of excess capital to cover possible adverse development in reserves, based around wide probability ranges over what our tail risk is. If we could narrow that range down, even a tiny amount, we could release large amounts of capital, which would improve our returns and make our sector much more attractive to investors. But since this technology can also model scenarios to high new levels of detail and accuracy, it could also be applied to creating entirely new insurance products to cover perils that are currently uninsurable. Any surplus capital could then be applied to these new products, and we could expand the insurance market, again making our sector far more attractive overall. The possibilities are genuinely exciting. I promise you that this is not going to be a maths podcast. Andre is authentic and incredibly down to earth and focused on the practical delivery of something new and genuinely revolutionary. Andre was also the founder and CEO of another advanced modelling and analytics firm called Schemas for almost 15 years from 2001, and so has long industry experience, and possibly a few scars and lessons learned to show for it. Back then, the insurtech phenomenon hadn't yet come into being. So sitting here in 2025, the timing would appear to be far better than it was back after the turn of the millennium. Anyway, you can probably tell the impatience in my tone of voice. I really think you need to hear what Andre's got to say as soon as possible. So I'll get out of the way. Enjoy the podcast.
Andre, welcome to the Voice of Insurance.
Hello, Mark, and thank you to Howdens for hosting us today.
Oh, it's fantastic. It's always good to be here. Obviously, I do quite a lot of podcasts in here, obviously, but usually with Howden people, not...
The imposter.
That's what's so good about the London market, what makes the world go round, doesn't it?
Indeed.
So, Andre, anyone who doesn't know you who's listening, why don't you give us a brief introduction?
Okay.
Run us through your career today and how you got associated with insurance.
Indeed. So background was investment banking, and I then left that to undertake study, and that study led me to research in information usage in insurance.
What were you studying?
I was working in a discipline called cybernetics.
I didn't know that.
Yeah, it was an interesting journey, and timing was good, the dawn of the internet.
Oh, right. So it was around sort of
2002, yeah.
Yeah, that was good timing.
So during that journey, Mark, I came across a guy who was doing PhD or DPhil at Oxford in information usage in non-life insurance. And on investigation, felt there was a real opportunity to enable the industry to use information more objectively to inform better decision-making. And I, rather than trying to innovate from within, I was lucky enough to partner with the research arm of the Ministry of Defence, Kinetic.
Was it just being privatised around that time, wasn't it?
That's right. The Carlyle Group had just bought into them.
Yes.
And they were a treasure trove of capability. Taught me a lot about trying to think outside the box of repurposing brilliance that's done for another, guys.
And often they're very abstract things and all this sort of academic, and they do it for the love of it. But they need someone to apply it to the real world.
Absolutely. And it was a pleasure to take wonderful expertise. And we started in an area of insurance that needed some insights. It was having a tough time. And we started with satellite insurance.
Because there's systemic risk in satellites, because obviously there's a lot of people buy the same brand of satellite and they all have the same problem. And you can't just send some repair van up in space to fix them, can you? So
correct. So that journey, the transferable learning is everything to me today. So
then you also had something for power stations as well.
Power stations and solar.
It's only because it had a memorable name. It was called Power Rat.
Dear, yes. Unfortunately, our branding wasn't the best.
It was easy to remember, not necessarily the best branding, but that business was Schemas.
That business was Schemas. Our aim, Mark, was to develop models to enable the industry to have better analytics. And we had pushback, regrettably. And so we ended up forming an MGA.
If no one else wants to use it, we're going to use it ourselves.
Absolutely, because we had to get some money back somehow.
And then what was the exit with that? How did that end up?
So Schemas was sold in 2021, I believe.
So you've got form and experience and probably a few scars.
Absolutely. And I learned an awful lot and met some wonderful people in the industry during that journey.
So why are we here?
Gosh, there you go, Mark.
You've got form, you're coming back.
Yes, and I was approached 4 years ago by the same team that supported me at Kinetic that were working with Ministry of Defence, GCHQ, out of University of Liverpool. And Professor Simon Maskell had spent the last 10 years building the most advanced Bayesian risk analysis model in the world, called the Big Hypothesis Model. And his team of 80 plus people was just an unbelievable achievement, what they had done. And their request of me was to look at commercializing it for insurance purposes.
This guy, I've seen him on TV.
Yeah.
There was a documentary on the BBC about trying to find the MH370. He was using advanced statistical techniques to try and find where it might have been.
Correct.
Where the bits are.
Correct.
And did you say something about the R number?
Yes, indeed. That was a breakthrough for us in terms of applying a Bayesian hierarchical model to what was considered to be the most complicated risk challenge on the planet at the time.
The R number, for anyone listening, we've all forgotten this but we all knew this very intensively during the pandemic. The R number is the rate at which a disease spreads. How many people does each person infect? So if it's less than one, eventually the disease will fiddle out, so that's good. But if it's over one, it's going to get bigger, and which is bad. But it's obviously really hard to calculate because you only have so much information and you have to calculate it really fast. And then you have to get it to a minister on a Monday morning to decide whether they're going to shut schools down or not.
Yeah, it was an incredibly complicated challenge, but really rewarding. And what came across was the maths were exactly the same as per insurance. The nouns were different, the labels.
Yes, Bayes, this is mathematical theories about statistics, which we can all look up, but this is not a maths podcast. But give us a rough idea of what's different about Bayesian theorem application as opposed to whatever we're using in the insurance industry right now. Let's talk in absolute layman's terms. I did maths A-level, I did statistics as part of that, but I didn't get that far.
So
we didn't get to Bayes.
Contrary to some beliefs, Bayesian modelling is not a new fad. In fact,
it's been around
for 250 years.
Yes.
And the limiting factor to date has been the lack of computational power.
So the real innovations, actually, it's the computational power to build, because this involves doing lots and lots of calculations. And
Yes.
So literally, this is something that's physically not possible until now.
Yes, and the breakthrough was Simon and his team's effort using a part of the model called STAN and patenting it to increase the speed of calculation by 86,400 times, which is incredible. And the reason is I learnt that's how many seconds are in a day.
If something was 7 days before, where you literally had, it's a bit like that, Hitchhiker's Guide to the Galaxy computer. It's like,
Absolutely.
What's the secret of the universe? You set it off and it says, well, it's going to take 27,000 years to calculate this. And you have to go and kind of look after the computer for 27,000 years and finding the answer was 42, wasn't it? But something that used to take 7 days is going to take 7 seconds.
Correct.
That's easy to understand.
And where people had got to with Bayesian models over the last 5-10 years was a development called a Markov chain Monte Carlo piece.
I remember people used to talk about Monte Carlo simulations.
And they were very computer intensive.
Yeah.
And to do the calculations we do, it would take months.
And I suppose it's not very useful. And if you're the CEO and the CFO, it's no use to me to know in 3 months' time that we got everything wrong 3 months ago.
Great
Well,
answers.
it's not very
just
useful, is it? It's
wrong
too late
time
now.
frame. Yes, indeed.
But if it's in 7 seconds' time, that's quite useful.
Absolutely.
Okay. And this business is called Intellegri.
Intellegri, yes, indeed, which means we shall understand Latin.
Oh, right. Okay. Good.
RiskSolutions.com was gone.
So your remit with Intellegri is, obviously, it sounds like there are tons of other applications for this statistical methodology with this computing power.
Yeah.
Obviously for finding aeroplanes, for calculating R numbers, but also you've got the sort of exclusive on bringing it to the insurance industry.
So our arrangement is we have an exclusive license for 75 years for the intellectual property, and the university and colleagues are equity holders in the company.
Well, that's a good way of partnering, isn't it? So they get to benefit.
It makes us feel very safe, actually. Yeah.
Yeah, but they're not going to run off if they've already owned the equity part and they've got to share with you, so that's nice.
And most importantly, Mark, they've got a huge war chest to continually develop the model. So we haven't got a static handover. All their ongoing innovation will flow down to commercial use over the next 5 years.
So they've done a lot of investment already, haven't they?
£44 million, I believe.
Wow. So that's quite good. As a startup, you don't have to ask for the money to do the work before you can apply it. You can go straight to get the money so you can apply it rather than having to do the work. So the model's there, the way of doing computation is there, and now you just need to go to market.
Correct. And I think given that for other modelling firms, their biggest cost of existence is development, and also biggest reason for failure is the models don't work. And it's a really nice place to be, whereby taking ownership of provenance and patent protected capability, it's made this journey very, very easy.
You know it already works. You just need to get it out there, really.
Yeah, absolutely.
And who are you going to get it out to? Obviously, we can model. There's so much data. Which part of the industry particularly aiming at?
So we're looking at innovation partnerships to solve specific problems within firms. And we've had half a dozen serious inquiries, 2 of which we're executing against at the moment.
And it's capital
modelling, and, for instance, looking at a legacy book of business runoff, the tail risk analysis we enable that migrates away from a single point estimate is incredibly valuable when looking at a runoff book of
currently,
business.
Someone's looking to acquire a runoff book. Presumably, they've got to go to an actuarial consultant, probably have to pay quite a lot.
Yep.
And then do they end up with an answer that's very useful for them? And how long does it take?
Well,
you want to do a legacy deal.
Yes.
It's $1 billion worth of US long-tail liabilities. Obviously, it could be quite hairy. You want to know what the worst case scenario is. How much capital could I lose if it really goes wrong? And I suppose at the moment, the current way of things work is that you've got to go to an actuarial consultant. You've got to have someone to give you a sort of piece of paper, an answer. And presumably, they'll come back with an answer and say, and they give you a big range about what the tail is.
Correct.
It could be 500 million, it could be 2 billion. And you go, well, that's not very useful. You're able to come and narrow that down how much more?
Hugely. And breakthrough for us with that, Mark, is re-engaging with my old colleague, Henry Sofa, who's a specialist in runoff. And the books of business we've been looking at, it's transformational, the analysis that we've achieved.
So obviously, I suppose, if someone says, oh, well, this billion could be 700 million, could be 1.5 billion, for example, or 1.7 on a worst case scenario. In order to cover that, you have to have a lot of capital, which makes it less efficient. If you were able to say, with a very high degree of certainty, we get it right down to, it's between 1.1 and 1.2, then someone can really say, well, I don't need so much capital because there's much less uncertainty. And that's what the product really is, isn't it? That's the benefit. And they can really hold less capital with a lot more certainty.
Absolutely. For the right transactions, absolutely.
And also, they can quickly find out the ones they don't want, I suppose, as well.
Yes, and that process currently, it takes months, Mark, and it's commercially clumsy for people to look at these books.
So again, there's another commercial imperative. So if instead of months, it's 7 minutes or half an hour or something, you can go and have a cup of tea and come back and it's done.
Yeah.
Then I suppose that means if you're out in the market, if there are 100 deals, you can look at all of them. Whereas at the moment, if you only look at sort of 10 deals a year or something like that.
I believe so. And the cost of analysis is prohibitive.
And of course, that's not going to be cheap either, is it? Because the actuarial consultancy is going to be quite expensive.
6 figures typically.
Right.
So, whether or not it's the right application for us at the moment, Mark, the tool is a brilliant filtering mechanism to ascertain what you should be focusing on.
But they're going to get speed. They're going to get a much narrower range with much more conviction behind it and have something they feel that they can really trust.
Yeah.
So that gives you commercial advantage. If you can look at 100 deals, then you can pick the best 10 rather than looking at only 12 and maybe doing half of them.
Absolutely. I'd like to think so. Yeah, definitely. That makes sense.
And I suppose runoff is a good place to start because it's regulated in a slightly different way. These are liabilities that are already out there that I suppose with a lot of modelling, with particularly capital modelling, something that's as fundamental as that, that's just, we're talking about, prudential regulation.
Yes.
PRA, whatever, regulators around the world. Obviously, the fundamental thing, the one thing you have to be with an insurance company is solvent.
Yes,
Otherwise, you're not an insurance company anymore, you lose your license. So presumably long term with this, you wouldn't have to get those approved by those prudential regulators? What is the regulatory position? Do you have to get a model approved?
Well, aspirationally, a Bayesian model, because of the transparency around it, can be regulated, yes, as opposed to the other black box type capital models that can't be regulated. And yeah, aspirationally, we would like to go for that regulation, certainly on the basis if it was good enough for the government to use in a moment of crisis.
But I suppose this one arm of government really ought to trust the other arm of government. So at least to say, well, that gives you a strong case, doesn't it?
We'd hope, yes.
You never know. You never take anything like that for granted. But it sounds like it's not a make or break or deal breaker type thing.
No, and it isn't for other vendors, but I think it would be something that we could achieve given the unique nature of the model.
So within an insurance business, who are the people who are actually going to be logging on and using this tool? It's the people in actuarial functions, right?
We'd really like to think that there will be communities of actuaries out there that understand this and embrace it to advance their own ability to move forward.
Is there any problem that they might, because they're wedded to other forms of mathematics, that they might not be able to embrace it? If you've been doing a certain methodology for 30 years and that's stood you in good stead throughout your career, if someone comes with some new maths, does that become an impediment to adoption?
A significant impediment to adoption, Mark, and we're under no illusion that the use of the GLM type models that are heavily embedded in the industry, they've done a fabulous job, but the world has changed.
I suppose the technology there is 30, 40 years old now.
30, 40 years old, fairly one-dimensional, single point estimates at the tail, hindsight.
And GLM, what's that stand for?
Generalized linear model.
Yeah, I mean, they've done an excellent job, and of course those models have got better and better and better over time. But now it's just, you're coming with something absolutely new, just much more powerful.
What was super interesting for me, Mark, when I looked at the wider community of risk analysis in finance, plural, I looked at the hedge funds, and over the last 5 years, their migration to this type of modelling has gone from single-digit percentages to north of 90% now.
It's a done deal now within that market.
Whether or not they're trailblazers, their challenges are not dissimilar to measurement of risk. They've just changed their infrastructures to accommodate the use of a Bayesian model.
What's the revenue model? I presume it's a license, that kind of thing. So, a license, how many seats and all that kind of
stuff. Well, it's a really interesting one. And I think very much influenced, Mark, by the ability to reuse what's already been invested in. And that gives us the ability to license what we consider to be best-in-class capability on an affordable license fee that makes it available to every insurer, not just the select few.
It sounds like with this, the intention is, because I suppose you could always be tempted to say, well, why don't I just go and raise some capital and then I'm going to have an edge on everybody else.
Yeah.
And then I can just take over the whole world of insurance. But it's far better to be in the business of actually selling a product to that insurance world and getting everyone to use it.
The research we've undertaken, Mark, suggests that this area of technical opportunity is one of the largest in the world, whereby capital modelling sales are forecast to increase to 30 billion in the next 3 years. And I think that's testament to recognition of required change.
Obviously, we model all sorts of things in insurance. And any other applications? I mean, we're starting on the capital side of things. So of how much capital do I need to take on the risk that I've got on my books? What else could you be doing? What about looking at pricing, that kind of thing?
It's an excellent question, Mark, whereby the answer produced serves capital modelling, pricing. It's just different deviations of how you treat that number.
So it could be more, yes, you've got that core and that could be applied to different things.
Yeah.
And I suppose you listen to the industry. What do they want to use it for, ultimately?
Well, I read a beautiful analogy, Mark, about the need for insight real time around your capital positions, whereby, to your earlier point, if an insurer becomes insolvent, they get shut down. They have to have enough capital. The analogy I heard was, imagine driving a car from London to Liverpool and you don't have a fuel gauge. And
you just don't know, are you going to get there or not?
And if you don't get there, you're shut down. So the way to deal with it typically is to overcapitalise.
Yeah, have an extra fuel tank on the roof rack or whatever.
Exactly.
A couple of cans in the back.
And simply put, we're giving people both a fuel gauge and a speedometer.
Yeah, and a really accurate one.
Yes, hopefully.
One would hope. Is just so you really know how much fuel you're using and you know you can definitely get there and you probably go there and back. How far have you got with funding, are you ready to go? We sort of imminent, we should be seeing Intellegri everywhere.
Yes, I believe so. We've had a really, really productive couple of weeks, and we're 75% of the way there. And we've got a meeting this afternoon with a group of investors. The lovely thing, Mark, is they're all industry people, and they are making a difference by way of it's useful to them, and they know other people it's useful for.
Well, I suppose there's a culture change that's happened since you started, because we've had 10 years of insurtech now. People have kind of got used to the idea. Have you noticed any cultural change? Now you're back. Have you noticed that we've seen the Lloyd's Lab, most businesses have somebody who's got the word innovation in their job title?
Of course.
So they better innovate. That's their job specifically, whereas before no one had that when you started schemas.
Absolutely. And I have noticed a change, a generational shift, not that it's completely different, but it's refreshing by way of the inquiry we're getting for this type of capability that I don't think we might have had so much enthusiasm for 15 years ago.
You had all that experience with schemas. What are you using? Any of those experiences that you know how not to do it, for example? You've got that experience now, things that you're going to be able to do differently from what you did the first time.
I think the most significant thing for me is not being the CEO this time round, Mark. I'm really enjoying the product development piece, the application. It's really exciting for me and someone else.
It's your Chief Strategy Officer, all right? What is your job title now?
Founder worker at the moment, so I'll try and get a label.
I mean, you've got someone to run the business.
Yes, exactly.
The day-to-day.
Yeah, which is just breath of fresh air for me.
And of course, you've got Simon, who's the absolute brains behind the operation.
Simon is our CTO, and it's just amazing to be able to access his extended team to solve really difficult problems.
So we're sort of almost pitching here for the industry. Why don't you give us some really hard problems to solve, because we might be able to do it. We've finally got someone who can fix it.
Yeah, I'd like to catch them out one day, Mark.
Well, yes. I mean, that's the thing. In insurance, we forget that actually some of the problems are really, really hard. Perhaps they could do all the processing for the London market as well while he's at it. Net settlement engine for a $100 billion market. It looks easy on paper, but actually it turns out to be quite difficult. Get him to do that. But yeah, maybe one thing at a time.
Absolutely. And to answer your earlier question, further applications, Mark, include some of the people we've worked with on what do you need? What do you want to see around risk measurement in your organization? And there is now a real demand for people to have monthly management reports that help with quarterly board meetings that tell them where they are on their risk journey in real time. And what was really interesting with that observation, Mark, is the third pillar of Solvency II, transparency and reporting. I don't think it's being properly fulfilled yet. And when I spoke to some of the banking analysts...
Well, it's a big, crude, blunt instrument. At the end, it goes, this is what our solvency ratio is.
Oh, gosh, isn't it just? Yeah.
And it's literally one paragraph, as far as I can see. Well, show your working, please.
Well, no, I spoke to an insurance analyst at one of the investment banks. I said, what would it mean for you to have almost a real-time insight to what's going on with these companies? He said, that certainty, if they're listed, would have an uplift 10% on their franchise value.
Because if someone's saying, look, we are really a prudent reserver, you can believe that, you can kick the tires whenever you want, but it's just a load of triangles and they give you a headache if you look at them for too long. And this is actually, it comes up, if you've got something that's a dashboard that's actually saying, look, this is flashing amber actually, or this is fully green, it's great, that would be a hell of a tool, wouldn't it?
I really believe so. And it sounds very science fiction, but currently the snapshot you get from the current modelling processes is hindsight.
Yeah.
And we give where you are today and what now might happen in your future.
I suppose that's the thing about Bayesian, isn't it? It's all about, given what I know,
correct,
what is the scenario?
Yeah. And also, it's nice to think people, if they want to look at new areas of business, new lines of business, modelling that in real time to see what impact it has on their portfolio, I believe that has to be extremely helpful as well.
So in terms of going to market, legacy market is really ready for this because it seems like it's a very quick and easy application there. And then you'd be rolling out to the live market. Or any particular part of the market you want to start with?
Well, again,
other than obviously legacy first.
The inquiries we are getting, and it's quite an obvious journey for us. It's not the route I really want to take, but we've been inundated by people wanting to provide capacity to set up a pandemic event cancellation piece. Given our work with the R number and our familiarity with all of that World Health Organization data.
Great, because at the moment it's sort of don't touch it. Or it's just, it's communicable disease exclusion, and we're not doing that again because we blew away, 50 years of premium last time that happened.
Absolutely. And the old adage of there's no claims data, okay, I understand
We've got lots of claims data now because we've got the whole pandemic database.
But our organisation of data and analysis in that area means that we're measuring on a daily basis, if required, near-miss type activity. And yeah, that's so opportunistic.
So the nice thing, it's not just about what's on the books, it's about what you could put on the books. So there's more forward-looking applications here.
Yeah.
So we can insure things we couldn't insure before because we can have a better idea.
Yeah, so in summary with that, the opportunity to create new products, lines of business, because you can measure the more complicated. I really wouldn't want to go down the MGA proprietor route, but if something is set up and we can license, then that's not second best.
What about you, Andre? What kind of entrepreneur are you? Now, this is your second time to the insurance market. So does that mean you're a serial entrepreneur? There are two different types of entrepreneur that I meet. And there's a type of person who loves solving a problem, getting a team together, getting something working, off and running. And once it's working, then they usually go and find another problem to solve. They say, you know what, this is all fine. I'll give it to someone else now because someone who's more operational who just wants to optimize it. But I really like the big idea. I like getting the big idea, and that's what makes me tick. And then they'll probably go on and do something else.
Yeah.
Or there's the other type that will stay with that idea forever. And then this is the thing. This is the sort of rocket I'm going to ride until I retire and, fire off into the sunset.
My journey with this, Mike, is, it's to be authentic with the answer. I do love the discovery. I absolutely love sitting with some of the brightest people in the world to create new solutions and opportunity. To your point, once the problem's solved, it becomes far less interesting for me.
I know what you mean, yeah. That's why I had to become a journalist, because when I was a broker, I liked doing new business, but I didn't like renewing the same thing I did last year because it became a different conversation. Solving a new problem is really interesting, or winning an account is interesting, but having to hang on to it, that's really hard. When it's also sort of about optimizing and the 1%, and I'm not really interested in that part. But so the great thing about being a journalist is you have to do new stuff all the time, otherwise it's not news.
Yeah, and I look forward to the day that the problem's solved, hopefully. So that's a new challenge for me in the future. But something I missed out earlier, Mark, is that coming back to the market, some of the people I used to work with that provided capacity, etc., have been fabulous. And it's been very easy to open up discussions with people that supported technology innovation years ago. And we all made money. And yeah, they're open arms now.
The funny thing about the insurance industry is that even if you didn't make money last time, they'd still be open, because good people who bring sensible ideas to them are always welcome, I would say.
But the industry is close and it's kind of lots of relationships. That's a breath of fresh air for me. To your point, as said, the ability to go to people that are familiar, it would have been a much harder sell, in my opinion, if you're going in as an unknown.
The only problem with this business is if the industry is too scared to find out whether it's massively under-reserved or not. Because I think the main pitch with a lot of these things is that classic that we're over-capitalized, and so therefore the sell is to that CFO is, you know what, we can release capital and it's going to be great and we can be much more efficient. But what if you come out with the computer whirs away in Liverpool and says, actually, you know what, you guys, you're all insolvent.
Oh dear, yes, indeed. That would be a tragedy.
I don't think we are, actually. But,
no, absolutely not. Absolutely not.
But anyway, this is a question we need to know the answer to, because this is what our job is. So we better do it. Someone better do it.
Yeah, it's a bit like not opening the letters when you're a student, the bank statement.
Yes, a friend of mine used to do that. It took him 3 years to finally get around to find how badly overdrawn he was.
Quite, yeah.
He's older now. He doesn't do that anymore. Anyway, so how do people get in touch with you? You've got website and all the other things. So we'll put a link to that on the bottom of the notes of the podcast. But otherwise, yes, you want people to come out and engage with you, give you a problem to solve, talk to you about licensing, etc.
Yes, yeah, absolutely. And so over the next few weeks, we'll be having some soft launch events for interested people. For instance, I've got a workshop with a guy that worked with us historically. He's an actuary. He was a capital provider, and we're working with him on solving a big problem for a big organisation.
We can't be more specific.
No, thank you. Sorry about that. It sounds very vague. But yeah, I'd love people to visit the website. It's going to be updated over the next 2 weeks to explain what we do technically, what the benefits are, who we are, and yeah, more about what we're trying to achieve.
Andre, do you think there's anything I've forgotten to ask you that I need to get out there?
very much definitely, but I can't think at the moment.
Well, that's a good sign. That's a good sign. I think always in wanting more anyway, Andre, because you're going to be around. You're back.
Absolutely.
You're going to be around. It's going to be very interesting.
Absolutely. I'm delighted to give people information if they want to make contact.
Absolutely. Well, Andre, thanks so much for coming on the show.
Mark, what a pleasure. Thank you so much.
So good to see you back. It's really good to see you back.
Thank you, Mark.
Well, I hope you enjoyed today's episode. If you did, don't forget to subscribe or leave a like or a review or recommendation on whatever podcast platform you used to access this program. These really help get the word out. Before we go, just a quick reminder that advertising slots are available here and in other places in the Voice of Insurance podcasts. Podcasting is the fastest growing medium and attracts a high quality audience of key decision makers. It's also an intimate medium where you, the listener, are right in the room with me and the interview subjects. Needless to say, that means it's a great way of getting your message out directly to an audience because you know you've got their full attention. It's also very cost effective. So get in touch with Mark at thevoiceofinsurance.com to find out how you could be speaking directly to the industry. The Voice of Insurance is produced in association with Advantage Go. Release your underwriters to underwrite with Advantage Go's underwriting platform. Voice of Insurance is produced by me, Mark Gagan. Music was written by Anna Gagan and produced by Carlos Gagan. Check out more podcasts and written comment pieces at www.thevoiceofinsurance.com.